Welcome to the Crypto Layer HQ. Today I'll be covering likely scenarios that might play out in February. So we've had a clear decline over the last few days, and now we've reached a very critical level. We can see this level here has been initially it got tested in March 2024, where we first came and it acted as resistance. We rejected and then we consolidated, and we eventually broke through during the elections. And when Trump got elected, we broke through, and then we came back and retested the level in April 2025. This level held again as support, and then we're back at it now, which for now we've had an initial bounce, which is expected. Of course, we're going to need to see more days play out to see if this does hold or ends up failing. So if this level doesn't manage to hold, then I think we could end up at the 200-week simple moving average pretty quickly. So if, let's say, this support zone ends up failing, we could end up at the 200-week simple moving average very quickly. Because if we look in prior cycles, we can draw these critical levels. So we can see in the 2021 bull market, we first came, we tested, held the support, we came back to this level in July 2021, we held it many times. Then eventually in the bear market, you can see it came to it held for about a month, and then once it failed, we were at the 200-week simple moving average. Even if we look at the 2018, if we draw a line here, this was also clearly another critical level. We bounced at it several times, it held. Once it eventually broke, we were at the 200-week simple moving average pretty quickly. So we can see every cycle has these critical support resistant areas that once they break in the bear market, we reach the 200-week simple moving average pretty quickly. So that's why I think this cycle is pretty clear. This was a pretty critical level, and that if we do end up breaking it, we could end up at the 200-week simple moving average pretty quickly. Now, other scenarios will be, of course, we might end up consolidating and holding at this level. If we do end up holding at this level and getting a rebound, what could that look like? So if we look at the 200-day simple moving average, if we look at previous cycles, we can see in the 2022 bear market, we did end up visiting it as a final relief rally. 2018 bear market, we did end up coming to it, rejecting, coming to it again, rejecting, and then we never really managed to hold above it sustainably. So we can see, if we look now, it is pretty high. So it's at 103K. I don't think right now it's very likely that we will go that high. But if you imagine we end up consolidating at this area for some time, by then the 200-day simple moving average will be significantly lower where it could end up being. So all around this zone, the 200-day simple moving average could be, which could result in essentially where we do end up, if we do end up holding, bouncing to around, and then it could end up acting as resistance and failing later on into the summer, where we do end up eventually coming to the 60K region in the summer and Q4 of 2026. So those are the two most likely scenarios I see playing out. Of course, predicting short-term price movement is very hard to gauge. So I wouldn't make any short-term trades trying to catch a bounce or anything like that in a bear market. I think it's better to try and capitalize on the overall trend. I think the overall trend is to the downside to end of 2026. So instead of trying to capitalize on catching small bounces, it's better to adjust your portfolio and potentially if you still are heavily or fully allocated and you want to, take some off the table, potentially bounces are better to be used as selling opportunities as opposed to trying to catch a quick trade on the reverse side, because it's very hard to predict if that's going to happen or not. And then think, okay, where are we going to be heading in 2027, 2028, 2029? And let's catch that larger trend, and that's probably going to be to the upside. So that's what I think is most likely going to happen in the next few weeks and months when it comes to potentially relief rallies. But I do think this is a critical level we should watch. Personally, I don't like selling into big capitulations or into big dips, because oftentimes we do get a reversal. We could end up getting something like this and even testing this level again, which was also acted as a support during end of November and all of December and even most of January. This did end up holding as support. So oftentimes support levels do end up flipping into resistance levels. So we could end up bouncing to this level and rejecting again off it, maybe coming back and testing. And we could end up just, consolidating for a few months in this level before potentially going lower into summer and late 2026.